David Shapiro here with the Shapiro Real Estate Group, local real estate investor and agent. And we got a special report for you talking about property taxes. You just got your May value in the mail, and you might be shocked with a 40 or maybe even 78% increase, like one of the examples that we're going to go over here today. With my colleague Lee Abraham, we have a combined 60 years of real estate experience. And we're excited to share this with you because this is shocking. That's usually your line.
It is.
And I showed this to Lee earlier. I was over the weekend, I was just thinking about this, and something theoretically just came to me, and I was like, wait a minute. Some people are going to see their taxes go down this year.
I don't believe it, David.
I mean, the math doesn't lie, right?
Okay.
So I figured this out in my head, and I was like, I got to come up with a model to show people how this works. So that's what I've done. This is quite a complicated thing because taxes here in Texas with how it all works is not simple, but I'm going to show you how it works. So the first key component to understand here is that in 2019, a new law was put into play that limited the city that they only could increase taxes 3.5%.
Okay.
So what that means is the aggregate value of property taxes. You add that all up, let's just say it's $1 billion of taxes that they're going to collect. This is the city, okay? That's one portion, one of the line items on your tax bill. So if we go over here and pull up our example, you can see that for this property, the different taxing authorities. So you have the community college, the school district, Austin ISD or AISD here in Texas. They all in an ISD. The other major one in Austin is Eanes ISD. The city of Austin, Travis County, and Travis County Healthcare District. Now, these are going to vary from property to property based on where they are, okay? We're using this one example. So they all have different tax rates, taxable values, and limits to how much they can tax.
Okay.
So if we just take the city of Austin here, for example, they're capped out at 3.5%. So that means if they collected $1 billion last year, doesn't matter what happens with the taxable values. They can't increase by more than $35 million in additional taxes if those were the numbers. I'm just using theoretical numbers to make the math easy here.
So to be clear, even though theoretically it's based on the taxable value, which is based on the market value, and those might have gone up 20, 30, 40%, you're saying that there's a cap on how much the taxes can increase. 3.5%?
3.5%. So essentially what the taxable value turns into, and this whole charade of property values, which were really low, previous years, they were artificially low, I would say, because any time in previous years we would go to sell a home. If a buyer pulled up TCAD value and said, wait, hold on, I'm paying $1 million for this home, TCAD has it at $600,000. Market value is not in line with what TCAD is showing. Now, I would say that the values we're seeing today that came out are probably closer. Now, some of them are a little bit even high, that, they probably could come down. Some of them are pretty accurate. But what's shocking is the percentage increase from the artificially low numbers that we had seen previously. It is shocking. But people are getting these and going, wow, I saw a 50% increase. I'm going to pay 50% more in taxes? But that is not the case.
Are you saying that's not true?
That is not true.
Oh my God.
Now, in some cases, it might be true, but for the most people, that is not how this is going to work. Since there's a 3.5% cap, what this whole charade, as I refer to it, is just a redistribution of where the money is coming from. So which property owners are paying how much in taxes. Okay, but ultimately, the amount of tax that is total going to be paid is not going to grow by some crazy amount, like 50%, like we're seeing, or 40%. I think I've heard it thrown around that the median increase was 40%. My properties were anywhere from 20 to 78%. I think it was, or 75, and I think the average was about 35% if you average those out.
Right.
So I'm going to start, just to try to put this in like a pretty easy theoretical context. Let's pretend we're in a world where in the city of Austin there are 2 homes. That is the entire taxable base. I want to keep this super simple so hopefully people can understand it. Home number 1, bucket A. So this is, even though we're just doing it as one theoretical home, it's really a bucket of homes, which is people that have a homestead on their property and they bought in 2020 or prior. So what that creates is this 10% limit on the amount that their taxable value can increase.
Okay.
Bucket 2 is everyone else.
Right.
So investors, or if you bought in 2021, 2022, you're going to put your homestead on there. Maybe it's already on there. So even if you bought in 2021, you get the $25,000 exemption, which I'm not going to spend a lot of time on because that's not the crux of this. Because $25,000 when we're seeing 50 and 70% increases
Right.
is a relatively small
It's a
amount.
fraction.
Yeah, those people, you're going to benefit from this following year, but for now, you're in bucket B. Here you can see on the screen, both homes in 2021 were worth $500,000.
Okay.
We saw a 40% increase, and now the 2022 market value, $700,000, $700,000.
Right.
The difference between A and B is the taxable value.
Mm-hmm.
And if we jump back over to our example here, market value $2.5 million, much different than the assessed value and then the taxable values,
Mm-hmm.
okay, which include the exemptions. So on bucket B, the market value and the assessed value are exactly the same because there's no exemptions on there. This is an investment property. Okay, so what does this mean? So for taxes, and I'm going to use the same tax rate as last year for now, roughly 2.2% in Austin. For bucket A, with a homestead, your taxes theoretically would go from $11,000 to $12,100, a 10% increase.
Okay.
That's how it's intended to function, and it prevents this runaway taxes like we're going to see in bucket B, where this person's taxes could theoretically go up 40% to $15,400.
Mm-hmm.
Okay. Well, here's where the 3.5% cap comes in. Now, I'm doing this on like a very broad, trying to keep it simple. So we're just using one general tax rate, even though I showed you the breakdown. That 2.2% is made up of 5 different taxing entities, and they all have different taxing structures with different caps and different things. Okay, I don't want to get too much into the weeds on this. I just want to talk high level. So we're making some assumptions so you guys can see this concept in action. 21 total tax revenue, if this theoretical market was just these two homes, would be $22,000.
Okay.
Well, the 2022 potential tax revenue, if we use the same tax rate, would be $27,500,
Mm-hmm.
which is a 25% increase in tax revenue,
Right.
which we just learned they can't do.
It's illegal.
Yeah. Now, they can't do it, but they have to go to a city vote. And how many of you people are going to vote for more taxes? I'd say that's probably an uphill battle for the city to get a vote passed to go beyond the 3.5%. They'd have to have a really good reason for people to want to do that.
Mm-hmm.
Okay. So the max increase of 3.5% would equate to maximum revenue of $22,770. So what happens in this scenario? They have to go back and readjust their tax rate. So what we're going to see is because values went up so much, tax rates are going to have to come down.
Mm-hmm.
Another theoretical example, if everybody's taxable value or market value doubled, they would have to cut the tax rate in half.
Mm-hmm.
Just like if they, messed up and they cut everybody's values in half, well, they can't just have half the tax revenue. Like the city would fall apart, the county would fall apart. So they would have to double the rate. Okay? So that's the caveat here that they're going to have to recalculate. Now, I don't know what it's going to be. I can, with pretty high certainty, tell you the rate is going down. We'll see what it ends up coming up at. But in this theoretical example, I pulled out some old high school algebra skills.
Okay.
Did a little formula.
Right.
And I got 1.82%. So if we take bucket A and bucket B and now apply our new tax rate to the taxable values, we get a total, if you add these two up, sum is $22,770 per high school algebra coming through for the win here. And we get our maximum revenue because, of course, I fully expect that any taxing entity, when they can, is going to take the most that they can.
Sure.
So we'll look at what the change in taxes that each of these homeowners pays.
Mm-hmm.
Bucket A, with the homestead exemption, would see a 9% nearly decline. Now, this is a simple model. There's a lot of other factors. The school district is the biggest portion, and their maximums are not as clear. So, again, I don't expect your tax bill to go down 9%.
Right.
What I'm trying to say is if you have a homestead exemption, you bought your home in 2020 or earlier, I'm predicting you are likely going to see your taxes go down. This is great for you.
Yeah, it's amazing.
It's amazing, right? And this is because of this crazy out of proportion increase in values. And so by seeing a 40% increase on bucket B, which is mostly investors, they're going to see this huge increase. Well, I guess it's huge compared to what homeowners, people as their primary residence are going to see.
Absolutely.
A large increase. So what this is doing, it is shifting the tax burden from those people that have a homestead exemption, that have lived in their home for more than a couple years, to the people that are new, they just bought a new home, or investors.
Mm-hmm.
And so those of you longtime residents of Austin are sitting there doing your little dance. Yeah, I stuck it to those Californians that came in and bought last year. So there you go. You get a win. We did have a lot of people, though, and I have a lot of clients that bought within Austin. They finally got to that point where they could buy a new home.
Mm-hmm.
Now, hopefully, if you're in that situation and you just bought last year, whether you're from California or you moved within Texas, we love you all the same. Although I do think it's funny when you ask somebody where they're from. If they're from California, they'll sometimes guess. They sheepishly don't, yeah, I'm from California. So I don't give them a hard time.
You're from Connecticut.
Oh yeah, another
So
long starts with a C state. But for those of you that bought last year, that we're gonna put a homestead on, and hopefully your agent prepared you and showed you, hey, based on your value,
mm-hmm.
the price that you're buying it at, here's what your projected taxes are going to be. And you didn't go off of some old tax estimate, because that is a mistake. And not even just last year, every time I've helped somebody buy a home, we always show them, here's what your taxes could go up to,
right,
based on the purchase price.
Right.
And it's been a pretty safe bet in years past to be able to submit to the county or the county appraisal district, here's what I bought the home for, and I would like you to reduce my assessment, my market value in your eyes to what I paid for the home. That seems fair. Okay, and they would do that in previous years. This year, I'll get to in a minute, there's a little bit of a caveat to that. So I've shown you the math. Now you're thinking, well, holy smokes, David, if all these investors just saw their property taxes go up significantly, they're going to all of a sudden sell, and we're going to see a big influx of inventory into the market.
Mm-hmm.
Well, I don't think that's the case.
Okay.
So I continued down my rabbit hole.
Let's go.
Of spreadsheets. So this is some numbers from a rental property of mine. By the way, you can pull, these are the tax receipts. So if you go to the tax assessor's Travis County office, you can pull up any property. So I'll use as an example this one that we were using that has like a 70% increase. Must be Rubal, is the last name. So you can quickly just go into the property in question. This is all public information. And you just come up here and click receipts, and you can see what they paid each year. So actually, you can see from 2020 to 2021, property taxes went down for this person. So this isn't even an unprecedented situation that for somebody with a homestead, their property taxes could go down. I actually played a little fun game and went through and just pulled some people, some different properties. This person from 2017 to 2021, their taxes only went up 9.5%. This person's went down 22% over 5 years. That's crazy, from 4,300 down to 3,300. This person's up 6% in 3 years. This person's down 3%. This person up 4%. So a lot of people, because of this, are going to see their taxes go down. I pulled the tax receipts for this specific property. Here they are. Here's the increase from year to year. Now, this is not a homestead property. This is a rental property. So you can see the increases are a little bit more significant. 2021 value, $325,000. 22 value, TCAD says it's worth $570,000. A 75% increase on this rental property.
Wow.
I saw this and I thought, oh, are my taxes going up 75%?
Mm-hmm.
All right, well, let's just say the estimated tax rate for 2022 is 1.9%. I think it's going to be in the 1.9% range, give or take 0.2, let's say.
Okay.
We will see what happens, see if my prediction comes true. Well, if you take that, we end up with taxes of $10,800, a $39.50 increase, which is 57% over the previous year. So that's still a hefty increase in the amount of taxes I'm going to pay. So would a property owner has this rental property, taxes out of control, sell on this bad boy, I'm out of here.
Okay.
Well, things they have to consider. One, they're going to have to pay capital gains tax.
Mm-hmm.
Versus if they believe in this market, they can let it ride and they can continue to see appreciation without having to pay any capital gains tax.
Mm-hmm.
Two, they're going to have to rebuy, higher interest rate. They got a 1031 exchange if they want to avoid the capital gains tax, and they got to go in and buy in this market.
Right.
Okay? Maybe they have some other investment outside of real estate that they want to go to. Maybe there's another real estate market that they found that 1031 has to be within the U.S. So within the U.S. that they have found has different dynamics and it's easier to buy. But, well, rents have gone up in Austin.
Mm-hmm.
So how much have rents gone up, and how does that impact the numbers here? So this property was renting for $2,500 a month. Rents have gone up 25%. That would bring my lease renewal to $3,125, a monthly increase of $625, an annual increase of $7,500. So landlords are still making more money despite the increased taxes, because taxes went up $3,950,
Yeah.
and rent went up $7,500.
Right.
And so let's look at the mortgage payment on this property. Now, I've owned this property for like 10 years, so the mortgage payment's pretty low. Principal and interest is only $800. Insurance might go up a little bit. We could say that would go up to $100 or something. Property taxes at $575 was 23% of the rent. About a quarter of the rent was already going towards property taxes. We've got an additional $328, which is another 13% of the rent. But we raised the rent 25%.
Right.
And the additional property taxes are only 13%. Like we talked about, it's a win. So this property owner, in this case me, but this is just an example to show you that landlords are still up. So there's no reason why they would go ahead and sell, because of property taxes at least. There's other reasons they might sell.
Right.
So the burden is being shifted from, it's not on homeowners that are living in their home, and it's not even on landlords. It's only being shifted to tenants, and you could say it's being shifted a little bit to new buyers, but they were hopefully expecting this, so that's hopefully not a surprise to them.
Right.
So tenants are seeing an increase, and you could say commercial properties, there's no homestead exemptions. At first I was like, 10-year lease, holy smokes. Can you imagine being locked in for a 10-year lease and all of a sudden taxes went up 50%? Well, it doesn't matter to the commercial landlords because the majority of those leases are triple net, meaning the tenants pay the property taxes.
They're passed through.
Yeah. So again, the burden is pushed to the tenants.
Mm-hmm. Well, it's like a lot of things. You look at one element of a story, in this case, the increased valuation, and jump to conclusions about the end result. And oftentimes that's a mistake. In this particular case, you're parsing out some of the nuanced math that most people wouldn't ever think about. And it's dramatic, as we said. It's shocking. And you heard it here, ladies and gentlemen. This is the Shapiro Real Estate Group headline of the day, and it really is fascinating. Anybody who has questions about their property valuation, we have some guidance on where to go.
Yeah. And so the property protest deadline is May 15th, or 30 days from when you received your notice.
Right.
Which might give you a couple extra days, but make sure to get that in and protest. There's no harm in protesting. Now, if you are this gentleman or woman and your property value went up 78%, should you protest? Because we've had a lot of people in a similar situation, and bottom line is it's not going to make a difference because you are capped with a 10% increase, an extra 68%. Are you going to be able to get the value down 69% and have it have an impact? Probably not.
Right.
It would depend on everybody's situation, but that's pretty unlikely. So probably no reason to protest in this situation. Some people make the argument, well, it compounds, so every year, but as you can see, they're just going to up it to the market value. So
right.
It doesn't really matter. You can rest easy, move on, and with the back of your mind that when October and the tax rate comes out and you're going to start looking at what your actual tax bill is, it's probably going to go down.
Don't worry about it.
So, man, we talked about fake news 2 months ago.
Yeah.
And it almost feels like the county creating some fake news with their huge increases. And it actually is a nothing burger for most people.
It's interesting, and really appreciate you digging into the math. So
yeah, I couldn't even sleep because I was like, this is crazy. I can't believe nobody's talking about this yet. So I'm happy to reveal it. If you got a lot out of this, please comment below. Tell us what you think. Like the video. Share it with a friend. And if you have any real estate needs in the Austin market, you're thinking about buying, selling, and investing, please reach out to the team at ShapiroRE.com. And we look forward to chatting with you more.